Hello everyone, welcome to Accounting 210. So in this video, we continue with our more accounting lab assignment. So last time we talked about the ROI, capital turnover ratio. No, capital. We talked about the ROI. We talked about the sales margin, capital turnover ratio, those things, right? So I hope you have a better understanding. In this video, we talk about another different type of the that kind of type of the same question, performance evaluation. So this is the question 27. So let's look at this question. I will post the solution to the Blackboard too. This one is talking about the variance. Sorry, that's not the one I want to talk in this video. I will make a separate video. Sorry, my bad. So we go to the page 633. We talk about the question 33, also performance evaluation. So in this question, you have sales, operating income, total assets, and then you have two different departments, right? You have two different segments. One is residential, one is professional, and then also asking about the required return. So this will be used for our residual income. Calculate ROI. So I'm not going to say too much, but let's just get some numbers so you have the general idea. So first one, talking about ROI, we said the ROI is your return on investment. So basically your operating income divided by total assets. So you have your operating income of 63.550 divided by your total assets 205,000. So you got the first one, ROI is 31% for the residual, and then for professional is 165,000, 375,000. You got 44%. And then asking about kind of how do you interpret. So we said that the professional is a little bit higher than the residual, residential. We said the ROI higher number is better, so professional is better than residential. Second one, talking about sales margin. So I'm not really going to do too much about sales margin. Basically, it's your operating income divided by your sales revenue, right? So you have your operating income divided by your sales. We got 10% for the residential. We got 16% for the professional. So general idea, we said the higher number means better. I will post my solution to the Blackboard if the marketing lab asks you how to interpret. That means every dollar, when you sell $1, 16 cents will go to your profit. So every time you increase your revenue by $1, your operating income will increase by 16%. For the professional segment, but for the residential, it's only increased by 10%. So professional has a better, how to say that, the profit margin, kind of with the sales margin, and for the professional is higher than residential. And the third one, talking about capital turnover, we said basically is your sales divided by your total assets. So if you do all the number, the residential is 3.1 times, and then professional is 2.75 times. What's the meaning of that? That means every time when you put your assets, your residential can turn the $1 3.1 times to the revenue, but the professional only turns that total assets 2.75 times to increase the revenue. It's generating $2.75 of sales for every dollar of total assets invested in that segment. So every time you invest $1 more, your sales will increase by $3.1 for the residential and increase by $2.75 in the professional. So we say a larger number is better. And then fourth one said asking you to do the expanded ROI. We talk about that actually. So ROI is your operating income divided by your total assets. Actually, is your sales margin times your capital turnover. because your sales margin is operating income divided by sales, and capital turnover is sales divided by total assets. So you cancel the sales, gives you operating income divided by total assets. So I don't have a calculator now, but if you do the numbers, 10% times 3.1 times, those two numbers will give you 31%. 16% times 2.75 times, those two numbers will give you 44%. So kind of you double check. Last one, asking about your residual income. We said the residual income is the income that is left for you after paying the return time your total assets, right? You got $110 from your income, but you borrow the money from the bank. So your residual income is only the money after you pay off the bank required return. So we said that for the residual, the first one, residential operating income is 63,500. We minus the required return. I remember it's 25%. We time the investment. We use total assets 205,000. So if you do the number, you will find the residential, the residual income is 12,300, and the professional is 71,250. So which one has more residual is professional, right? But they are positive. So that means they generated a higher income than the required one. So they are both doing actually fine, but professional does better. So I would say question 33 and question 21 we did last time. Those two questions are good example to practice the performance evaluation type of question. So either you feel the missing part, or the question just asks you very straightforward, hey, do all the numbers and kind of give some interpretation. So let me know if you have any question. I think you will definitely be tested for this part of the material. Thank you. See you next time.